Hello everyone, welcome to today's US Open live webinar. I'm your host Nikos Zaboura, Senior Financial Editorial Writer at FXCM. It is Tuesday, November 21st, 10 minutes before Wall Street opens as always. And it's all about artificial intelligence this week. Since OpenAI, the creator of ChatGPT, ousted its CEO, and of course this impacts Microsoft, who has invested billions in the company and has been able to emerge at the forefront of this AI revolution due to this partnership. And of course, after the close today, we have Nvidia, the enabler, of course, of this AI revolution, reporting tonight its latest quarterly results. Besides that, we also got some encouraging news around China's troubled property sector, and this supports copper prices, while USD JPY heads toward its worst daily streak since July. These are some of the themes that we'll be covering today, but as always, please read carefully through the risk warnings and the disclaimers before we begin. Once again, please read carefully through the risk warnings and the disclaimers, and bear in mind that anything discussed in this session does not constitute investment advice and should not be taken as such. I will give you a few more seconds to read through, and then we will begin. Okay, let's get the ball rolling. As I said, artificial intelligence is in the spotlight. We're gonna start though from a few other things. We're gonna start off with Euro USD as usual. We're also gonna talk about the USD versus Japanese yen, which is having its worst daily streak in months. Then move to copper and also talk a little bit about the impact of some recent news around China's property sector. And then we're gonna move to the developments around OpenAI and Microsoft reactions to the leadership change there, and also talk about the NASDAQ. And we will round things off with Nvidia's incoming results and the upcoming minutes by the Fed. So on the Euro USD front, with not much in the way of a new catalyst, the pair stays on this recent ascending trajectory after last week's soft US CPI inflation report. Markets see the Fed as done with rate hikes and contemplate on the timing for the first cuts. On the other hand, the Fed speaks of a prolonged restrictive stance. Either regardless of if there's going to be another hike or not, they speak about a prolonged restrictive stance, and of course do not rule further tightening. The ECB, meanwhile, has made big progress on inflation, which could allow it to stay on the sidelines after last month's pause. Now, from a technical perspective, the move seems a little bit exaggerated. And it's hard to, we've said it before, the policy dynamics, monetary policy dynamics at this stage are a bit muddy, given that both central banks may have already done enough to bring down inflation. But again, it's still too hard to declare victory. Now, Given the advance, the pair now tackles the 61.8% Fibonacci, tries to surpass it, and try to take out the next resistance at 1.1096. However, as I said, the move looks a bit stretched. And interestingly enough, if you see the relative strength index at the bottom of the chart, it diverges lower, unable to post higher highs following the price of Euro USD. That divergence could lead to downward pressure and back into the daily Ichimoku cloud. But daily close below the 200 period EMA, the black line that you see at around 1.07 would need a strong catalyst and could endanger this recent upside bias. Now let's move to the US dollar versus the Japanese yen. It unravels after rejecting the July 1990 high, decades high, the red line represented by the red line on the top of the chart. And of course, again, optimism for the end of the Fed's tightening cycle is the key reason here, which weighs on the greenback. The pair runs the fourth straight losing day, and that is the worst streak since July, and moves well below the 200 period EMA, the black line that you see on the chart, which has supported it since mid-summer. The decline exposes the pair to the September low at 144.43, but here again the move seems a little bit too much. As you can see again by the RSI, we have extremely overbought condition, and the daily Ichimoku cloud could contain this this fall. The ascending Ichimoku cloud, the blue cloud that you see on your chart. Although the Fed may have done enough to restore price stability, it can rule out more hikes. The BOJ, on the other hand, moves towards normalization, albeit very slowly. And I've said this before, that the shifting dynamics could lead to substantial repricing, but given the massive rally, but it feels too early for that. We could see an effort by the greenback to reclaim the 200 period EMA at around the 150 handle, but it will need fresh impetus to do that. It will need a catalyst to do that. And of course, we do have the Fed minutes later today. We're going to talk about that towards the end of the session. Now let's switch gears. I want to talk a little bit about copper and in relation to some news around China's real estate market. We don't talk about that a lot, but we do from time to time. I mean, about copper prices. So they are supported over the last few weeks, and definitely over the past few days due to some encouraging news from China's beleaguered property sector, which of course copper is widely used in construction, and China is a top consumer of copper. So what are these news? Authorities signaled further support on Friday, urging financial institutions to facilitate reasonable funding needs of property developers, while embattled real estate firm Sunak said it has met its restructuring requirements, which helped improve sentiment in the sector and help, of course, Sunak's stock to a 10%, to a more than 10% jump today in Hong Kong. So copper extends the this last week's recovery and the broader rebound from the October 2023 lows. And this brings the next major resistance at 4.026 in the spotlight. However, it does not inspire much confidence for tackling that, for challenging that level yet. And the fact of the matter is that the property sector remains in distress, and authorities will need to do more to support it, while China's broader post-pandemic economic recovery is faltering, although there are signs of stabilization. As such, there is risk of renewed pressure back towards the 200-period EMA, but a strong catalyst will be needed for closes below that level, which is located at around 3.678. Okay, and with the US session underway, let's turn our attentions to the US tech sector. And let's start with the OpenAI drama after the board ousted CEO Sam Altman. It's an evolving story because there were talks to bring him back. One board member at least expressed his regret for the decision, while most employees reportedly have threatened to quit. OpenAI, of course, is the creator of ChatGPT, the generative AI chatbot that sparked the artificial intelligence boom, which is the main reason, this AI boom, behind this year tech sector rally. Microsoft, of course, is in the spotlight because it has invested billions in the company, and this collaborations has allowed it to emerge at the forefront of the AI revolution. But this surprise shake-up in OpenAI threatens to stall its progress. Microsoft CEO Satya Nadella acted quickly and stressed that the company remains committed to the partnership with OpenAI, while announcing that Mr. Altman will be joining the company, and also offered a message of continuity during the media rounds. Market reacted positively yesterday, at least, and sent Microsoft stocks to new record highs. And let's take a look at that. So you can see here Microsoft stocks, although opens lower today, it cleans new record highs yesterday. However, the situation is still fluid, and it's hard to determine where the chips will fall, but definitely the relationship with OpenAI is crucial for Microsoft. And markets reacted, pushed the stock of Microsoft higher yesterday, but they also pushed the broader NAS100 higher, which tested the 16K handle for the first time this year, which brings the record highs in the spotlight at 16,770, but this may prove elusive in the near term. The move looks a bit stretched and already faces headwinds, the index. So a pullback would be reasonable, but sub 200-period EMA weakness will need a significant change in sentiment. The 200-period EMA is located at around 15,200. In any case, of course, the trajectory will depend on the incoming Fed minutes and, of course, Nvidia's results. And let's go ahead and talk about these results of Nvidia. Nvidia, of course, is the enabler of the AI revolutions, which was sparked by ChatGPT, as we talked about, since its GPUs are the go-to solution for handling the heavy workload for the training of large language models. It recently unveiled its most advanced AI chip. It already reaps the benefits of its leading works, since its stock has roughly tripled this year, and the firm posted blockbuster quarterly results the last time around in August, and you can see our analysis of those past results on the top of your screen. And that was, of course, fueled by strong demand for its AI infrastructure. So revenues doubled from a year ago in that quarter, and profits also ballooned. The company has also signaled strong appetite for its products and has dispelled any concerns around supply too. Its near monopoly, of course, can't last forever. Already Advanced Micro Devices, AMD, which is one of the few firms with the potential to compete, is making progress, although it's still behind. It expects to start seeing the impact of its artificial intelligence chips in the last quarter of the year, while Microsoft is also entering the arena with its first AI chip unveiled earlier this month. The result comes at a period of fraught Sino-Western relations, and the latest trade curves by Washington see more of Nvidia's integrated circuits falling under restrictions. And of course, Nvidia's results will be also a broader gauge around how AI demand evolves. And as we head towards the end of today's session, let's also talk a little bit about tonight's release of the minutes from the last Fed decision. The central bank had kept rates unchanged for the second time in a row and had made a dovish shift to its rhetoric, with Chair Powell refraining from repeating his previous clear message that policy is not sufficiently restrictive to achieve the 2% inflation target. However, more recently he firmed up his rhetoric, saying that he's not confident that such stance has been attained. In any case, it's hard for the Fed to rule out further tightening. Markets, however, believe that the Fed is done. The rates have already peaked according to market pricing, and last week's soft inflation data reinforced this view and brought forward the timing of rate cuts. Of course, this week is holiday shortened for the US. Wall Street will be closed on Thursday due to the Thanksgiving holiday, and it will be a half day on Friday. We will have our next session on Thursday, as always, and at our usual time slot. That's it from me for today. Thank you for joining me.